the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements for the day. Well, Singapore shares rose today with the global trade situation back in focus as investors put the Israel-Iran ceasefire behind them. Now, the Straits Times Index was up 0.64% at 3,963 points at about 12:37 p.m. Singapore time, and that is with a value turnover of some 511 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.7% at 3,966 points. In terms of value turnover, we are looking at 1.4 billion Sing dollars. Now gainers outnumbered losers, 309 versus 202. Top 5 movers by value. Let's take you through them. We've got for you DBS, UOB, OCBC, Singtel and SGX. Now let's take you through the top advances and decliners as well. Top advances we have DBS, XMH and Hong Kong Land USD. And top decliners we've got for you GMH USD, ASUS and Semco Industries. Well, in terms of counters to watch for today, we've got AEN because the semiconductor test solutions provider raised its revenue guidance for its first half ending June to between 185 million Sing dollars and 195 million Sing dollars. Now, elsewhere from how the White House said US President Donald Trump could extend his deadline for trade deals beyond the 9th of July, to how SoftBank Group CEO Masayoshi wants the Japanese group to become the biggest platform provider for artificial superintelligence within the next 10 years. We've got more international and corporate headlines in focus for today. And joining me on the line is Benjamin Goh, Head of Research and Investor Education at SIAS. So many things going on, Ben, today.
Yeah, quite a few moving parts here. Happy to chat through it.
Okay, let's start with the U.S. this time. There appears to be some hope surrounding global trade because the White House said Trump could extend his deadline for agreeing deals to avert painful tariffs beyond the 9th of July. What's your take on the matter, and how have investors reacted to the news where Asian markets are concerned?
Well, I guess the knee-jerk response is that having more time to complete the trade deals is, always good, right? If you think about it, Trump's 90-day deadline wasn't very realistic to begin with because for a trade deal that is good for all sides usually takes years to complete. So I think the narrative right now for global markets is more really driven by the collective sigh of relief that the Middle East conflict has been paused, at least for the time being. As you can see, when the news first came out earlier in the week, the risk-on sentiment was, kicked off to a great start. Already U.S. markets are flirting with historical highs. If you look at NVIDIA, the poster child for high beta, very volatile kind of AI-driven stock, it's already burst through its it's already at historical high. And, the narrative there is, again, very bullish now. If you look at in the afternoon, European markets open, again, very strong opening in Germany, UK, as well as in France. Asia markets, a little bit of a mixed bag. Singapore, of course, up 0.7%. Japan up very strongly, 1.4%. But China and Hong Kong were down. I think that's really because of a little bit of profit taking, for the last few weeks, especially in Hong Kong with the whole La Boo Hot Mart craziness. And of course, a very strong IPO scene. So I think a bit of profit taking over there. But overall, a bit of a mixed bag in Asia, but nothing too crazy.
Okay, now speaking of Asia, Ben, we've been waiting for this for quite some time, U.S.-China trade truce. Now, a White House official earlier said the U.S. reached an agreement with China on how to expedite rare earth shipments to the country. Now, later on in the day, we've got news about how both sides have nailed down details of a trade agreement that they reached back in London to implement the consensus, again, reached in Geneva. So what would this mean for regional investors then?
Well, just a little bit of a background. The rare earth minerals is actually quite a big deal for the U.S., simply because the U.S. is kind of a world leader in terms of high-tech industries, anything that requires a microchip. And of course, they don't actually mine it, at a level of scale that China does. So obviously this is a huge thing for the U.S. So this kind of, I guess the agreement was welcome news, but again, as an analyst, I'm trained to nitpick here. But what really are the specific related U.S. countermeasures that are going to be removed? So if you think about it from a macro perspective, the agreement is really just specific to rare earth minerals as well as related U.S. countermeasures. This is not the comprehensive final agreement that we've all been, waiting for between the U.S. and China. It does remove the fear of a hard stop, a flying off the cliff moment where China says, no, you guys are not going to get this anymore. You cannot produce any more phones and chips. That's not going to happen. But if you think about it, it really just brings the U.S. and China back to where they were at the beginning of the year, before Liberation Day, right? Yeah, so it's
back to square one.
Move it forward. Yeah, it's just back to the status quo in terms of rare minerals. Okay, so I think what investors can do is that we're coming to the end of June. So the second quarter results are going to be out starting in 2 weeks' time in the U.S. So investors may want to look at the earnings results as well as the guidance, especially the guidance and management comment from companies in the semicon sector to get a take on how they see this agreement helping them in that particular sector. So companies like NVIDIA, TSMC, so on and so forth, that could be a good kind of a barometer for how the sector is actually dealing with this news.
I see. And if we could zoom in on some of the movements right here in Singapore, right, Ben? How did the STI fare today? Any surprises when we look at the biggest movers and the sectors?
Well, as you mentioned, the three local banks performed relatively well.
Yeah.
SGX, fortunately, was down. I think Fund Supermart was down slightly as well. Companies in the property development sector was up about 1%. Both of these sectors are generally what we call cyclical pro-growth sectors, so they're largely in line with the overall risk-on global sentiment right now. If you look at the packaged space, or rather the packaged food space sector, Wilmar First Resources were up pretty strongly, 0.7%. Interestingly, if you look at Golden Agri, which is in a sector adjacent to Wilmar First Resources, was down about 2%. So, something could be going on there. Offshore and marine, largely flat. So overall, I think the market performed more or less in line with overnight U.S. markets as well as what is currently happening in European markets.
Okay, and if we look at some of the companies to watch for today, Ben, we've got AEM, because the semiconductor test solutions provider raised its revenue guidance for the first half ending June. We are looking at a range of between 185 million Sing dollars and 195 million Sing dollars right now, versus an earlier range of 155 million Sing dollars to 170 million Sing dollars. How far have the numbers piqued investors' interest and raised confidence in the company if we look at AEM's share price today?
Well, in a sentence, the market loved it. So It's not just today. Stock price up 7%, but yesterday's stock price was up 14.5%. So very strong performance for a 2-day run. So a little bit of caution here, right? So if you pass through the data, AEM's revised guidance for the higher range is simply because of a pull-in of orders under, quote, non-cancelable long-dated purchase order program, unquote, for one particular customer. So as an analyst, I think I would be more comfortable if the company provided more color behind this. Because there are two scenarios here, right? So if these orders are because the company, and this is not the company, sorry, the customer, the one customer is simply front-loading the orders, meaning orders are being brought forward, then the change in the order book is more of a timing issue, right? But if the other scenario is that if the orders are new because of additional new demand from the customer, then of course that could be a material change. What the company has also stated was that its view of its business environment remains the same as its last update as of 13th of May. So kind of like good news, bad news, don't really know what to make of it. Obviously, the market loves it. More information is needed, and I think the company will have an opportunity to discuss all that because it is reporting its earnings 13th of August.
Okay.
Yep.
Now, if you're just tuning in, we're now in conversation with Benjamin Goh, Head of Research and Investor Education at SIAS. Well, another counter to watch for today, Ben, is Aztec Global, because its wholly owned subsidiary, Hoof, on Wednesday, entered into this sale and purchase agreement with JT Automation Technology Malaysia to divest factory buildings and land in Johor, and that is for a consideration of 28.8 million Malaysian ringgit, 8.7 million Sing dollars thereabout. How significant of a move is this for Aztec Global? And once again, how have investors reacted to the news?
Well, today the share price is down about 1.67%. But, to be sure, there's probably some profit taking in this because the share price is up 7.27% month to date. From an accounting perspective, this is what we'll call a one-off divestment gain of Malaysian ringgit 13.7 million. So that's not really materially change the long-term value of Aztec. I think the main challenge here is the company's order book, right? So the problem with order book is that going forward, order momentum is weakening. The company is gonna have to take more time to acquire new clients, right? Even I think it was today or yesterday, DBS Research has published an updated call. So again, it's fully value call on a stock, but DBS Research has reduced its price target from 52 cents to 38 cents. So that's not great. But again, let's take the long-term view here. Aztec has been around since I was a teenager. We're talking about decades here, right? So don't count them out yet. So they've been around, right? So I think what we need to do is to wait for some kind of positive catalyst. So that's when the stock will then start moving into an uptrend.
Okay, and further away, Ben, let's talk about shoes. Nike reported sharply lower quarterly profits overnight, but signaled that it was past the worst stage of corporate retooling as it implements surgical U.S. price increases to defray tariff costs. What's your take on the latest set of numbers then?
Well, the numbers, not good, to be honest. So reported numbers, revenue and profits down 12% and 86%, year on year. So obviously the headline numbers are horrible. Further on, the CFO has also stated that estimated impact of U.S. import tariffs, because they make a lot of the shoes in China, right? Estimated at $1 billion. Most of it is going to be taken in the upcoming quarter. So investors should expect a hit from that. So current financial situation not good. Now, if you recall, I think we spoke about Nike quite a few months back, right?
Yeah.
So we had a structural problem, or rather Nike has a structural problem. So the previous CEO strategy was to have constant and frequent limited edition shoe models being released into the market. So they were trying to have this scarcity marketing play, so a lot of limited models. But the problem was that it was too frequent, right? So the idea was to encourage FOMO consumption, but it was basically too frequent. After a while, people kind of lost track. And then Nike ended up with too much inventory. So that's what they've been trying to restructure in the last year or so. So apart from that ongoing restructuring effort, we have got announcements that Nike is going to reduce its footprint in China, so make more shoes outside of China, so that will help alleviate or lower the import tariffs. And also they have got some new models that they are working on. So all that will benefit Nike, in the following years or months, but not immediately. But there is Yep.
No, I was about to ask you because the numbers were low. It was sharply lower, but I believe they were better than expected. So would you say that investors' expectations were low to begin with this time around, given what's going on with regards to Nike?
I think that's true, simply because they've had many quarters of subpar performance. And of course, when you do a sector comparison versus New Balance, Adidas, so on and so forth. They had a specific problem of having too much inventory. So it wasn't a sector-wide problem. It was basically a company problem. And of course, investors, gave low marks to the previous strategy and I guess the leadership.
Okay.
So it was a relatively low bar in that sense. So I would say you are right. But I think there's also anecdotal evidence coming up that his new strategy could be working, and consumption could be coming back. If you look at the new Nike Air Max phenomena, not yet launched, but already has got a online resale value of more than USD $500. So the scalpers are already putting up some numbers.
Okay, okay.
So it's back to the heyday of, crazy Michael Jordan, Air Jordan kind of thing. So that actually bodes well, but of course it's just anecdotal data points right now.
Okay.
Yeah. So I think what's been happening, and again, coming back to the market, the share price is actually up. I think 4.4-ish%. I think what's been happening is that investors are really giving the bad financial news a pass for the time being. So they are looking beyond the restructuring back to where Nike was previously. So it will be interesting to see how that turns out.
Okay, and finally, before we let you go, Ben, I think it will be interesting to see how this turns out as well. SoftBank Group CEO Masayoshi saying today that he wants the Japanese technology investment group to become the biggest platform provider, not for AI, but for artificial super intelligence within the next 10 years. I believe Masayoshi-san, he have talked about not AI, but artificial general intelligence before. So how would you read into the latest comments?
Well, artificial general intelligence might invoke fear in some people. I mean, if you're my age, you remember the Terminator movies and so on and so forth.
Wow.
But I would say progress is moving apace, but we are really not at the AGI space yet. I think what he's talking about is to provide funding to build an ecosystem of tech companies that will support AGI as well as adjacent sectors adjacent to AGI. So it's not just the algos, but it's also the manufacturing, the research, so on and so forth. I think it's a super ambitious goal, and in order to execute and complete this goal, what his fund needs to do, right, is to invest in both existing tech companies as well as promising startups that may become tech leaders over the next 10 years or so. Now the challenge here is, of course, it's very hard to predict winners. I mean, you have got companies dabbling in digital currency. You've got companies which are now in the quantum computing space. A lot of promise, some anecdotal evidence that it could work, but again, very hard to predict the winners. What is also interesting is that apart from picking winners, SoftBank also announced a project Crystal Land, which is basically to provide and develop a manufacturing industrial hub in Arizona, USA, replicating the Shenzhen industrial parks that Singapore had a hand in helping China to set up. So SoftBank is talking to, or rather wants to talk to TSMC, Samsung, so on and so forth. So again, another piece of evidence that SoftBank is trying to build the ecosystem, not just in terms of the tech itself, but also the manufacturing component. It's going to take years, but we'll see what happens. Things change very fast in the tech industry.
So things change very fast, and I think SoftBank is now back to all those very ambitious and aggressive investments on tech. We shall see how it all unfolds. Thanks so much for the insights, Ben. As always,
Sure.
That was Benjamin Goh, Head of Research and Investor Education at SIAS. Thank you so much for joining us today at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.